The 2008 financial crisis was one of the most significant economic crises in recent history. It began with the bankruptcy of the American investment bank Lehman Brothers in September 2008 and quickly spread throughout the global financial sector. This crisis led to a global economic recession that lasted for several years and had long-term economic, social, and political consequences. One of the main causes of the 2008 financial crisis was the practice of risky mortgage lending, also known as subprime lending. These loans were granted to borrowers with a poor or uncertain credit history, which meant they had a higher probability of defaulting on their loans. These loans were then packaged together and sold as securities to investors around the world. When borrowers began defaulting on their loans, the value of these securities plummeted, causing significant losses for investors and financial institutions. Another contributing factor to the crisis was the use of highly leveraged financial instruments, such as collateralized debt obligations, CDOs, and credit default swaps, CDSs. These complex financial instruments allowed investors to make highly leveraged bets on the housing market, which amplified the effects of the subprime mortgage crisis. The 2008 financial crisis had far-reaching consequences for the global economy. It led to a sharp increase in unemployment, a decrease in investment, and a decline in economic growth in many countries. It also contributed to an increase in public debt in many countries, as governments had to spend significant amounts of money to bail out banks and stimulate the economy. In response to the crisis, governments and regulators took measures to strengthen financial regulation and improve risk monitoring. In the United States, the Dodd-Frank Act was passed in 2010 to regulate banks and financial markets. In Europe, financial regulation was strengthened with the establishment of the Banking Union and the creation of the European Banking Authority. The 2008 financial crisis also highlighted the importance of international cooperation in addressing global economic challenges. Governments and financial institutions around the world worked together to rescue banks and stabilize financial markets, and then worked to establish stricter international financial regulation. Despite these efforts, the 2008 financial crisis continues to have repercussions to this day. Economic inequality has increased in many countries, while unemployment and public debt remain high. The consequences of the crisis have also had an impact on global politics, with a rise in political extremism in some countries. In conclusion, the 2008 financial crisis was one of the most significant economic events in recent history. It had global repercussions and led to a global economic recession. It also highlighted the flaws in the global financial system and led to efforts to strengthen financial regulation and risk monitoring. Despite these efforts, the crisis continues to have repercussions to this day and underscores the importance of strengthened international cooperation in addressing global economic challenges.